Hey, what's going on, everybody? It is Wednesday, October 18th. Just to let you know, tomorrow and Friday, I'm heading out to the desert to go camping. So, I'm not going to be having any internet connection. I'm not going to be having any cell phone connection. I'm getting away from this crazy world and going into a little solitude. And it's going to be a lot of fun, and I need it. So I just want to let you guys know that in advance. Anyway, today market was down. You may recall a few days ago I did a video and I said, "Is this the beginning of another leg in the rally, in the stock market rally?" And the reason I made that video was because we had a day when the market, the Dow anyway, shot up. It reversed the prior week's decline by quite a bit, actually. And in the video, I said that it was not the beginning of a new rally. And actually, I had been sending out to my subscribers emails saying, like, stay cautious, stay defensively positioned. Don't think that there's anything particularly strong or some kind of, new leg up, because that's not going to happen. And the reason why I'm able to say those things, and you can see how it worked out, the reason why I'm able to say those things is, again, I follow the fiscal flows. I said way back months ago, I already said that this period, which is the October 15th tax strain, and by the way, I'll go over the numbers in a second, that was going to be another period of, volatility. When I say volatility, that means downward movement in stocks. And that's exactly what's happening. And a lot of you, I don't know, maybe some of you, maybe a lot of you, I don't know, you're sitting there drawing lines on charts, and maybe you saw like what looked to be a breakout, the other day when the Dow shot up over 300 points, and actually it was up slightly even the following day. There were 2 days in a row. And I don't fall for that. And I used to be kind of like, following that sort of analysis, if you want to call it. It's not really analysis. That's just guessing. I mean, when you draw lines on charts and things like that, there's really like no relevance to that whatsoever. If anything, I mean, if I were to use that, I would look at these things and I would take them to be like false signals. Sometimes they might work out, but more often than not, because I know that people are following these things and drawing lines and, doing Fibonacci calculations and all this silly stuff. And it goes back to my days as a floor trader when we used to know where those technical levels were, where we would know in advance how people were going to react. We'd actually know where the orders were because we would talk to the brokers in the pit, and we got to be friendly with them, and they would tell us where the orders were. And every time those orders got elected or they got hit, we would go against that. So the way I would use it is not as anything predictive in terms of, it broke that line or that moving average and that means it's going to keep going. I would use it like as a contrary indicator because I know that triggers a lot of mass behavior at certain levels. Anyway, let's get back to what I do. And the question I posed is, how did I know that we were going to head back down? Because I know we are in this period of a tax strain. The helicopters are there once again. I had the dogs here a few minutes ago, folks, just to let you know, but the dogs went away, so the helicopters have to come by. So let's talk about the tax strain. So now, in the last two, basically Monday, Tuesday, okay, we had an 80 billion drain from the peak was on October 12th. When I mean the peak, that was the peak federal deficit for the month of October so far. It hit 39 billion, the deficit, on October 12th. Let's call it 40 billion because it was 39 point something billion. Now the government's running a surplus of 40 billion. So you had really in the period of 3 days an 80 billion drain from the financial balances of the non-government, of the economy, of us. I paid taxes on Monday. I had to pay taxes too. So I mean, I felt it. An 80 billion drain, okay, in 3 days. That's why the market is going down. It's not about crossing any lines on charts or anything else like that. You had an 80 billion drain. Now, there may be a trickle of this left, but now what we have to start to anticipate is that the regular, daily flows are going to start to replenish that drain. Okay, I've been through this with you guys. If you've been following me for any length of time, like I tell you in advance when these drains happen. I tell you in advance when these fiscal flows expand, like with the quarterly interest payments, and then I say, okay, that's the peak, and now it's going to slow down. I tell you all this stuff in advance. So now we have to watch, because the swimming pool been drained by 80 billion, okay? Now we have to watch to see when the water level starts going back up again through normal spending. And it's going to go back up again all the way until November 15th when we have a quarterly interest payment. And by the way, and somebody informed me of this, I didn't even realize, California they delayed their tax payments until November 15th. Okay, so that's a new element in the equation. And I'm not sure how much of an offset that's going to be to the quarterly interest payment, okay? And then we have the Florida tax payment on February 15th, but that's still a ways off. I'll get to that when we get closer to that. So now we have to look at when the swimming pool starts filling back up again. As it starts filling back up again, market's gonna go back up, okay? And I don't talk about timing a lot. As a matter of fact, I did a video the other day saying it's all about time and not timing. But I know some of you guys, you're interested in timing. For me, timing is about when I see these flows shift, when they reverse. Like right now, timing for me is not so much about picking a price point, which that's just silly because it's meaningless. Prices are arbitrary. For me, timing is about when I start to see the flows coming back in and the water level starting to go back up. That's how I use, or that for me is timing. Okay, so as soon as I see that, and again, there might be a couple more days, a trickle left of this tax drain. I have to look at when the next Social Security payment is. It might be any day now, actually. I don't remember when the last one was. What was it like? What's today? Is the 18th? It might have been on the 13th or the 12th. I think it was on the 12th, which means there should be one tomorrow. Tomorrow there should be a Social Security payment. Anyway, I got to look that up. You can go Google it yourself. You just Google Social Security calendar, and you look at the month of October, just see it. Tomorrow might be a Social Security payment. If so, that's going to be a significant positive addition. So now we have to recover, basically to get back to where we were on October 12th, we got to recover 80 billion. We first have to recover 40 billion, which would eliminate the government surplus. Remember, what is a government surplus? They literally took away, you could see it in the numbers. And you could see how it affects, the stock market and literally how it affects the economy. In 3 days, you drained out 80 billion. You think about some of the policies that are, or some of the legislation or some of these spending bills that are passed in Congress. 80 billion is a significant amount. And that's spread out over, a year or months. This happened in 3 days. Okay? And this wasn't even really a big drain. I mean, the April 15th tax drains, you're talking like over 125, maybe even 150 billion. So we got to recover that 80 billion. But it doesn't mean we sit here until it's all recovered. When we start to see the water moving back up in a consistent way, day after day, that's good enough to get back in aggressively. All right, and let me add one more thing. When that drain starts to get recovered, that's going to be bearish for the U.S. dollar. Okay, so you're literally putting more dollars into the system. The dollar's been strong. As a matter of fact, you can watch that. That I think could be almost like a leading indicator. If you start to see the dollar moving lower, it already might be an indication that we're recovering some of that drain. Anyway, that's how you do it, folks. This stuff is not hard. There's no particular mystery in this. I hope now from these videos that I put up that you see this, because I tell you everything in advance and it happens exactly on schedule. So, I mean, what more can I do, right? Anyway, that's it for today. Don't forget, go to my website, pitbulleconomics.com, if you want to get the Understanding the Daily Treasury Statement course. It's $99. And don't forget to sign up. Got to check out my report, MMT Trader. You'll be on the email list. You'll be receiving my daily updates many times throughout the day. All right, everyone. Have a good one. I'll see you. Bye. I don't know if I'll see you tomorrow. Maybe not until Monday, but if I have a chance to make a video tomorrow before I hit the area of the desert where there's not going to be any more internet or cell phone coverage, I'll try to do something.